The income tax system is a fundamental part of society, shaping economic behavior and reflecting national values. At its core, it is a progressive system where those with higher incomes pay more, ensuring fairness. Tax brackets, deductions, and credits help fine-tune the system, providing incentives for beneficial activities like education or green energy use. Different types of income, earned and unearned, are taxed differently, sparking debates about fairness and economic growth. Corporate taxes also play a key role, with their own rules designed to stimulate investment and innovation. Tax administration is complex, requiring efficient systems to ensure compliance, and digital advancements have streamlined processes. However, challenges like the digital divide and privacy concerns persist. Ultimately, the income tax system is ever-evolving, reflecting economic changes and societal values. Understanding its complexity is crucial for participating in the democratic process, as it influences nearly every aspect of life, from public services to economic equality. The debate between progressive and regressive taxation reflects deeper societal values, economic priorities, and the kind of community we wish to build. Progressive taxation asks more from those with higher incomes, aiming to reduce inequality by ensuring that the wealthier contribute more to public services and social welfare. It strives for equity, helping those who can least afford it while maintaining fairness in society. On the other hand, regressive taxation applies the same rate to everyone, regardless of income, but disproportionately burdens lower-income individuals as they spend a larger share of their earnings on taxes. This system can widen the gap between the rich and poor, increasing inequality and reducing opportunities for social mobility. The choice between these systems speaks to how we balance fairness, economic growth, and social responsibility. Do we prioritize reducing inequality and fostering solidarity, or do we value simplicity and efficiency? Despite the potential cost to the most vulnerable, our decision shapes not only tax policy, but the very fabric of the society we wish to create. Tax deductions, credits, and incentives play crucial roles in shaping economic behavior and achieving policy goals. These mechanisms reduce tax burdens, incentivize certain actions, and guide both individual and corporate decisions in ways that benefit society as a whole. Tax deductions lower taxable income, making certain activities like charitable donations or homeownership more financially appealing. For example, in 2023, the U.S. standard deduction was $13,850 for single filers and $27,700 for married couples filing jointly, reducing the income subject to tax and promoting behaviors like homeownership. Tax credits provide even more direct benefits by reducing the actual amount of tax owed, dollar for dollar. For instance, the U.S. Child Tax Credit in 2023 offered up to $2,000 per qualifying child, easing financial strain on families. Similarly, credits for energy-efficient improvements, such as a 30% credit for installing solar panels, encourage environmental sustainability. Incentives include both deductions and credits, targeting specific areas like research and development. For example, a 20% R&D tax credit helps stimulate innovation, benefiting the economy. However, while these tools can be effective, they can also introduce complexity and may disproportionately benefit higher earners. Tax deductions, credits, and incentives are vital tools that influence behavior, drive economic growth, and align personal and corporate actions with societal goals. But they must be carefully managed to ensure fairness and efficiency. Navigating the complex landscape of corporate taxation is like embarking on an adventurous journey, filled with challenges and opportunities. Corporate taxes are essential for funding public services, from infrastructure to education, but they also present hurdles in the form of high rates and intricate loopholes. Corporate taxation is essentially a levy on profits, calculated after expenses such as salaries and operating costs are deducted. Global corporate tax rates vary significantly, reflecting diverse economic policies and societal philosophies. In many jurisdictions, high tax rates are seen as a necessary contribution to the social contract, where corporations fund services that benefit them and society at large. Hidden paths in the tax code, such as deductions and credits, allow some corporations to significantly reduce their tax burden. This creates disparities, where well-resourced companies exploit loopholes while smaller firms struggle to meet their obligations. This inequity has intensified calls for tax reform, aiming to create a fairer and more transparent system. Proposals often suggest lowering statutory tax rates while broadening the tax base by eliminating loopholes. This would ensure that businesses compete based on quality rather than their ability to navigate the tax code. There's a growing emphasis on international cooperation to ensure that multinational corporations pay taxes where they generate economic value, rather than shifting profits to low-tax jurisdictions. The path to reform is fraught with challenges, requiring a delicate balance between maintaining economic growth and ensuring that all corporations contribute fairly. This involves navigating the complex interplay of interests among stakeholders, including businesses and the public. The pursuit of tax compliance and enforcement is equally crucial, as it ensures that public services are adequately funded. Tax compliance is not just a legal obligation, it's a collective responsibility. Tax authorities act as guides, helping taxpayers navigate complex regulations, while enforcement mechanisms, like audits and penalties, ensure fairness in the system. Emerging technologies such as data analytics and AI are revolutionizing tax compliance and enforcement. These tools enable tax authorities to identify patterns of evasion and streamline administration, though they also raise concerns about privacy and individual rights. Building a culture of compliance requires trust in the tax system and assurance that collected revenues benefit the public good. Looking to the future, income taxation is poised for transformation. The rise of the gig economy and digital currencies challenges traditional tax models, prompting authorities to adopt more sophisticated methods to capture new income streams. International cooperation is also vital in addressing the challenges of a globalized economy. As societal demands for fairness and sustainability grow, progressive taxation models may resurge, imposing higher rates on wealthier individuals to address inequality. New tax incentives could promote environmentally friendly practices, aligning taxation with sustainability goals. The concept of universal basic income, UBI, may also reshape the income tax landscape, necessitating significant reforms to fund a guaranteed income for all citizens. In summary, the future of income taxation must be flexible, fair, and aligned with 21st century challenges. It's not merely about policy adjustments, but reflects our collective vision for society. Balancing revenue needs with fairness will ensure a tax system that fosters a just and sustainable future, paving the way for progress and innovation.